FX Chief here. I just want to say thank you for taking the time to come and learn a little bit more about Forex trading. I've been trading the Forex market for more than 25 years, and I've certainly learned a lot along the way. In my journey of learning how to trade, I read countless books on trying to figure out how to trade in the markets and how to take advantage of the markets. But one of the key issues was trying to discover a turning point. One of the things that I was taught, what was called the head and shoulders. See, a head and shoulders pattern is a pattern where the market is, in fact, in a trend, and it is, in fact, going up, making higher highs and higher lows until the market comes real close to support. Now, these lows are called support. These highs are called resistance. And when the market comes real close to support, just like this, it gives a trader an idea that perhaps the market's going to reverse. Now, here is the head. That would be, here's the eyes right there. Here's the nose right there. And here's the mouth, okay? This is the head and shoulders, okay? Now, the head and shoulders is based on a left shoulder, a head, and a right shoulder, okay? And how a trader is taught to trade this is to draw what's called a neckline. When the market comes down, makes a low near the low here. When the market makes a low, you draw a neckline. Now, what you're supposed to do is you're supposed to sell when the market breaks the neckline, okay? Here was the problem for me. Now, the market begins to rally after creating that low, and then it starts to fall down, and right here you sell. Right there you sell. The problem is, in selling this low, what usually happens is, see, remember this market's making higher highs and higher lows? Well, this is still a higher low. Now the market breaks the neckline and takes out the low of support. It is when the market takes out the low of support that is your biggest sign of a reversal. Well, usually what happens is when the market takes out support right here, this level of support right there with this move, it has a tendency to once again bounce back up and wave all the way back up like this before it falls. I'll put a protective stop above the most recent high. Well, there would be a stop. Now, I used to do this. And so there the market took out the low, and after it just took out the low of support, the market would rally all the way back up like this, stop me out. And then just as soon as I got out, the market would fall. What I discovered after getting beat up over and over and over again, I discovered what's called a King's Crown version. See, what I did is I figured out that as the market waves up, it waves in an up A, B, C, D. When it's trending down, it trends in a down A, B, C, D. So the question for me was, where's the best place to get in? When I put these two formations together, watch what happens when I slide these two together. What does this look like? Doesn't this look like a king's crown? See the king's crown? Here's the left tip of the crown, here's the center tip of the crown, and here's the right tip of the crown. Well, when I spatially saw this formation, I then said, well, wow, let's look at how this market U-turns. I mean, look at this crown right here, everybody. Let's look at this crown. Left tip, center tip, right there. One breaks the trend line, comes down to support, waves back up, and then falls. Do you see the crown? So what I said is, wow, if instead of selling it at the neckline break right here, if I just wait till it waves back and sell it at the C, gee, I'm going to make more money and not have to endure this threshold of pain. So let's put this into practical use in the market. Let's look at this. Now, once again, here's our trend line breaks. Look at this. Market was in a downtrend, and now it's rallying up, making higher highs and higher lows. And wouldn't you agree that it's in an uptrend here? Okay, now look at. Here's up. A, B, C, D's. Okay? Once the D's complete, we repeat the pattern. A, B, C, D. Okay? And this is everything we teach here at Market Traders Institute. Here is the market waving up, A, B, C, D. You can see it. You can see the waves, A, B, C, D. And now it's waved again, A, B, C, D. See it right there? It's waving up. And so now the market has come down and made a neckline. It has two eyes. This is the head. There's the mouth, the nose, and here's the mouth, okay? There's the head, there's the left shoulder. I was taught via technical analysis from all these famous traders around the world to sell the neckline. Here there would be a neckline, and I would come down, and right here, boom, I sell the breaking of the neckline. I shorted the neckline, and the market broke the neckline. Now it's come down and taken out the low. When a trader trades the king's crown, he's anticipating the market to come down like this and take out the A, and then rally back up and then fall. Do you see the crown there? Left tip, center tip, right tip, fall. Where would be the best place to get in? Here. Wouldn't it be, since it's going to wave down, to get in deep as it comes back down? So there's your crown. See, here's the best place to get in. I learned right here at a right tip of a crown. Now, you, a novice trader, pick up a book. You learn about Head and Shoulders. You think this is great. You discovered something wonderful. And now you're going to make all this money. You're no different than I was when I didn't know what I was doing. But now that I'm an active trader, crowns become very critical and important to me, because if I get in at the right tip of the crown, I'm in at the best place to get in to short it, and I'm not going to incur any drawdown or any threshold of pain. The others say, hey, I'll put my stop a little deeper. Some of you may put it right up here above this new down A, B boundary coming back down. Me, I'm going to wait until this market retraces back to a deep right tip of a crown. Let's look at what the market starts to do. Okay, you're kind of excited. The market's kind of going sideways, fell a little bit. But now it starts to rally. And now you're concerned. As a matter of fact, look at, we'll just put a line where you shorted the market at the break of the trend line. That's where you sold it, everybody. Me, I'm going to wait till it forms a deep right tip of a crown. Now, it continues to rally. As it continues to rally, okay, and goes sideways here, now you're 100 pips in the red or $1,000 in the red. Me, I'm not doing anything until it starts to break a down trend line or gives me a bearish candlestick formation. Look at this. It's still making higher highs. See how it's waving up now? I'm waiting to get in at the right tip of this crown, right here at this right tip, because this is what's called a bearish shooting star right here. This is the right tip of the crown based on a bearish candlestick formation. Can you start to see a crown start to unfold right here? Can you see a left tip, a center tip, a right tip, and a fall? There's where I'm going to get out for profit. You just lost $1,000. Even if you put your stop way up here and you're still in, you're still $1,500 in the red. I'm just getting in, selling right here at this right tip of the crown, and this is where I'm going to get out for a profit. Now, let's look at my risk. See, if I short the market right here, this is what I am going to risk. I'm only going to risk right here, up above that A high. There's my risk. Look at how much risk I'm incurring. And let's look at my reward. Okay, this is my reward. Here's my reward all the way down there. Look at that. Look at my risk versus my reward. Risk versus my reward. This is where successful trading comes in. What we do is we teach our clients how to take advantage of this market so the market doesn't take advantage of them. Look at your risk. You shorted the market right here. You put your stop way above the A. Let's just say you still put your stop above the A. There's where you're at in risk. Look at your risk. And then let's compare that to your reward. Here's your reward. If it comes down and hits that, there's your reward. Wow. Who is going to make more? You trading the head and shoulders, or me trading the crown? Let's watch what happens. All of a sudden, boom, market comes in and falls. Here's the market. Look at how this market started to fall from my entry. Look at it. Started to fall from my entry and then comes down, slowly starts to work its way back down, all the way down to my green line, because that's where I'm going to get out for profit. Here it slowly is working its way down to that green line. And here we go. Come on. Come to Papa, as the saying goes. Boom. Look at how I'm filled. Now, let's take a close look at the crown. Do you see the crown? Do you see the crown? Once again, I'm going to repeat the saying that I did. See? There's left tip of the crown, center tip of the crown, right tip of the crown. Here's the head and shoulders. There's the neckline break. Gee, traders that traded this, and everybody, you need to understand something. I traded this head and shoulders for years until one day it just slapped me in the face and I started to spatially see a formation of a crown. And because of that, it has changed my trading dramatically, because think about it. Look at how I got in on the first wave of the new downtrend. Here's the new wave. A, B, C, D. See? Do yourself a favor. If you are seriously thinking about trading in the Forex, educate yourself. If not by us, educate yourself from somebody who is actively trading in the markets. We are actively trading in the markets on a daily basis. We call trades live all the time. The best thing you could ever do is to properly educate yourself before you put dime number one in the market, so you can learn how to properly take advantage of this market so it doesn't take advantage of you. Everybody, I just want to say, this is the FX Chief, and I really appreciate you taking the time to listen how to become a better trader and how to trade the King's Crown versus the Head and Shoulders. This is the Chief.